Get your free copy of the complete tutorial at www.teachucomp.com/free.
Next, we will examine what happens when it comes time to dispose of a fixed asset. When you sell a fixed asset, you can have a gain or loss on the sale of the asset. You may also sell it for its book value, in which case you will not have either a gain or a loss. When you sell a fixed asset, you must make a journal entry that removes the original cost of the fixed asset, also removes any associated accumulated depreciation for the asset, shows any cash or other type of asset received for the sale, and shows the gain or loss on the sale, if there is any. First, you will need to know the book value of the asset that you are going to dispose of or sell. This is calculated by taking the original cost of the fixed asset and subtracting the accumulated depreciation of the asset. You can then determine the gain or loss on the sale of the asset by taking the value of the assets received, usually cash, and subtracting from that number the book value of the asset sold. The result of this calculation is the gain or loss on the sale of the asset. The next step is to record the journal entry for the sale of the asset. This entry changes depending on whether or not there is a gain, loss, or no gain or loss on the sale of the asset. However, the entry always removes the original cost and associated accumulated depreciation of the asset, and then recognizes the cash or other asset value received for the sale. Let's look at an example of selling a fixed asset and the associated journal entries that could occur based on whether there is a gain, loss, or no gain or loss on the sale of the asset. For example, assume that you are going to dispose of a photocopier that was originally purchased for $5,000. The total accumulated depreciation on the asset as of the sale is $4,000. That gives you a book value of $1,000. For the first example, assume that you have a buyer who is willing to pay you $1,000 for the photocopier. When you subtract this amount from the book value, you will have no gain or loss on the sale of the asset. When making the journal entry, you will debit your cash or checking account for the $1,000 received from the buyer. You will then debit the accumulated depreciation account used for the fixed asset by $4,000. This will effectively remove the asset's accumulated depreciation. That gives you a total of $5,000 in debits recorded in the journal entry. You then only have to credit the photocopier fixed asset account for $5,000, which will cancel the original cost of the fixed asset. However, what would you do if you had a buyer who is willing to give you $1,500 for the asset? In this case, you have a gain on the sale of the fixed asset. This income is typically recorded to an other income account named something like gain on fixed assets. This then changes the journal entry slightly. In this scenario, you would debit your cash or checking by the $1,500 received. You will then debit the accumulated depreciation account used for the fixed asset by $4,000 to remove the asset's accumulated depreciation. This time you have a total of $5,500 in debits recorded in the journal entry. You then credit the photocopier fixed asset account for $5,000, canceling the original cost of the fixed asset. You then credit the gain on fixed assets account for $500. This shows the income earned from the sale and balances the journal entry. Assume that you had a buyer who was only willing to pay you $500 for the photocopier. In this case, you have a loss on the sale of your fixed asset. When this happens, you will need to attribute the lost value to an expense account, usually named something like loss on fixed assets. This time, when making the journal entry, you would debit your cash or checking by the $500 received. You will then debit the accumulated depreciation account used for the fixed asset by $4,000 to remove the asset's accumulated depreciation. Now you debit the loss on fixed assets expense account for $500. This gives you a total of $5,000 in debits recorded in the journal entry. You then credit the photocopier fixed asset account for $5,000, canceling the original cost of the fixed asset. This shows the loss incurred from the disposal of the asset and balances the journal entry.
Like what you see? Pick up your free copy of the complete tutorial at www.teachucomp.com/free.